As you can see, the stock market crashed hard today. Nasdaq down 2.84%. S&P down 2.11%, and the Dow was down 1.54%. Now, why did this happen? Why did this happen after such a great day yesterday in markets? Well, yesterday, the Bank of England came out and said that they were going to start quantitative easing. And people got very excited about that because they looked and said, hey, if the Bank of England is going to start easing on interest rates and putting liquidity back into the markets, then everybody else is going to probably start doing that. And that made markets just flourish. All of a sudden, we had our Fed come out and they started reaffirming that they were going to continue quantitative tightening and continue their interest rate hikes as long as the data says that they need to do that. And that is what happened today. That's why you had Google falling 2.3%, Microsoft falling 1.48%, Apple, of all companies, I've said this many, many times, every single company is going to be susceptible. When you have Apple dropping 5%, it's time to pay attention. Amazon down about 2.75%. These companies are all going to get hit very hard. This can happen to any company, okay? We also had a couple of earnings come out, guys. Nike reported earnings. 93 cents per share, beat their 92-cent expectation. Nike is going to be a very important company looking forward, and I think that their revenue here, 12.69% revenue beat versus 12.31. This is going to be an important one. A lot of people look at these companies, Walmart, Target, anybody in the retail space, but especially Nike because they deal so much with China. And what is happening with China? Having a lot of supply chain issues that are coming out of China. We're having a lot of these COVID lockdowns that are still coming out of China. And Nike did very well over in China. Now, they have not guided forward yet. People are guessing that maybe they're going to guide on their earnings call, but a lot of these companies, as you know, are not having any guidance going forward because they want to see the data that comes out because the times are so uncertain. So for me, Nike is a company that I would pay attention to if I was you, because you want to understand what's happening overseas and what's happening with the American consumer as far as the buying in the retail space goes. Now, you also had Micron come out. Micron had mixed earnings. Earnings per share beat $1.45 versus $1.37. However, revenue did come in a little bit lower, $6.64 versus the $6.78 billion in revenue in the quarter. Not totally surprising. And their guidance was bleak going forward. Again, not surprising based on what you saw from AMD, Intel, NVIDIA, etc. in that chip space. $4.25 billion going into the next quarter versus 5.6 of what analysts wanted to see. This is not a good sign. You continue to have all of these chip companies that just keep coming down and coming down and coming down. And it's not the worst thing in the world because, guys, we did have this. Let's think about what we had. We had the chip space that went way, way up. If you know, the first 10 years before COVID happened, this was basically the computer market. It was very flat. And then all of a sudden, in 2020, everybody started staying at home because of COVID, and you had this massive spike. It was the first time that they had grown since about 2011. Now you're coming out of this. You're coming out of this massive peak that was an anomaly situation. A lot of these companies are going to start trickle back down. It's not that the computer market is going all the way down here. It's that the computer market is just coming back to where it was. I should probably draw that in purple. It's just coming back to where it was, just like that. It's not that big of a deal, but you need to factor it into when you're looking at these things. For me, Micron is a stock that I'm looking at. Intel is a stock that I'm looking at. AMD is a stock that I'm looking at. NVIDIA just hit a 52-week low today. That is definitely a company that I'm looking at. And all of these companies that are in that computer space are going to get hit, and we are going to need to continue to follow them, continue to follow the market. So what should you be thinking if you're the average investor? Well, based on this, I'm looking at this saying, well, heck, this is actually looking like a pretty good opportunity for me. I think if it's me, I'm going to start going and taking a look at these types of stocks. Your Microsoft, your Apple. Apple is now sitting at about $140 per share. Okay, we could pull it up here on the Everything Money software. $140 per share for Apple. 142 at close of the day, but it got as low as 140 today. This is a company that when I look at these 8 pillars, I say to myself, I am really liking these overvaluation numbers because everything else for this company follows suit, falls into play of what I really like, having that good return on invested capital, having that good revenue growth going forward. So guys, see what these central banks do, continue to follow what they do, continue to follow these earnings that come out. Earnings season is coming in hot over the next couple of weeks. You need to see what these banks do. You need to see what these retailers do, and you need to see what happens in this tech space. Have a great night.